everyone. This is Craig Hohenberger. Thanks for joining us today. There's obviously a lot of new developments with the stimulus package that is being passed right now, which is fantastic for small business owners. Just some quick housekeeping. Please mute your computers. If they're not muted, that'll reduce background noise. And I'm going to share my screen, and then I'm going to introduce some of our other folks with us, and we're going to get this thing knocked out hopefully in the next 45 minutes or so, and then we're going to, even sooner than that, but hopefully we can even get through questions and answers in the next 45 minutes or so. But we will stay here as long as we need to answer any specific questions you have about your unique situation. So I'm going to go ahead and get into the PowerPoints now. And let me get over here. Okay, so again, I'm Craig Hohenberger. I'm with ActionCOACH. That's my wife, Annette. She's my business partner. We've been at this now since March of 2001. And we started 6 months before 9/11. So I know what it's like to go through several of these cycles. Dave Wogan there in the middle will be speaking. I'll introduce him here in a few minutes. He's with PhoenixFunding03262020, and he's got some unique equity rollover options leveraging retirement funds of all things. So he can explain those in detail. And then Mike Golick, again, from HuntingtonBank. And Mike is with the largest SBA lender in the nation based on numbers of loans that they approve every year, even though they only do business in 8 states. So that just tells you how small business friendly Huntington is. And then right after Dave, Mike will talk, and then we will open it up for Q&A from there. So just a little bit about ActionCOACH before we get in to everything. We've been around for over 27 years now. We're the world's #1 business coaching team. We're in 83 countries. We literally work with tens of thousands of small businesses all over the world in all industries. And we can even guarantee results financially for our clients. Every one of our coaches around the world right now, because this is a worldwide crisis, is offering some free services to small businesses that are in need. So please plug in, get with your local coaches if you're not currently a client. If you'd like to get introduced to a local coach in your region, just pop us a note and we'll be glad to get you connected. Like I said, we've got phenomenal people all over the world guaranteeing results, and we are actually growing coming out of this. This will probably be really good for our business in the next coming months. So if you know somebody who would make a great business coach and wants to be with the world's best team, similarly, please refer them. So first things first, just have perspective. Things are changing rapidly. It's literally day by day by day. So we must act quickly. At ActionCOACH, we call ourselves that for a reason. We're not sit around and think about it and someday I might act coach. We are take action right now. So you got to act quickly. Also remember, this is going to pass eventually. We don't know exactly when. Trump is trying to declare that it's going to be past us by Easter. I hope he's right, but we'll see. 9/11 passed, the dot-com bubble passed, the Great Recession passed. We've been in a great boom economy, and this is going to pass as well. There will be a new normal. We don't know exactly what's coming, but it will change some things. We've got to be prepared for a boomerang effect with the virus, potentially this coming winter, etc. So we've got to get ready. 9/11 obviously changed the world in a major way when it comes to travel and security and things like that. So we don't know exactly how this is going to change things, but it will. So we've got to get ready. The feds are definitely doing the right things. They learned a giant lesson from the Great Recession. And so there's 2 things. Number one, fundamentally, our economy has been very strong. Going into the Great Recession, our banking system really was starting to crash. So we had some fundamental problems and fractures in the economy. They were lending money to people who didn't deserve it, things like that. And that's not the case now. We have a very robust economy if it was not for this virus going through the world right now. So that's a one-time issue. We'll get past it. The second thing the Feds learned from the Great Recession was they did a lot of bailouts for the large corporations, but they did not make sure money went to small businesses. And small businesses are the backbone of our economy. You guys, as business owners, you're the backbone of the economy. They are truly freeing up a lot of funds right now and streamlining that process, making it easier to get access to capital, et cetera. Mike will talk a lot about that. And funding is available. The banks are still open. Mike will probably speak to that as well, but they're even doing startup loans through normal SBA lending right now, even for restaurants, which can't even open their doors today. So have perspective. It's all good at the end. There's bad stuff we're dealing with, but it will be good at the end. Manage your mindset. We've got to be proactive. We've got to be positive with this. Panic, worry, they don't help. You guys signed up to be leaders when you became entrepreneurs. And so you've got to lead your people. And some of that is managing what you feed your brain with. So sometimes less news is better. The news is obviously geared towards keeping eyeballs glued and hyping up things and all that kind of stuff. So get just enough that you can stay informed, but make sure your mindset is positive. We've got to reduce fear. We've got to reduce uncertainty. We've got to reduce doubt. So hopefully as this stimulus bill rolls through in the coming days and gets finalized and access to cash is available, that's going to help a lot there. But your job as a leader of your business, especially if you have employees, is to reduce FUD and lead your people through this. Some lessons from the Great Recession, 9/11, the dot-com bubble, et cetera. We got to be pragmatic and persevere through this as well. We're not going to be able to do it alone. So surround yourself with the right people. Get plugged into the right communities. Our action coaches build communities of clients, other small business owners. So if you're not plugged in yet, get plugged into one of those communities. We've got a number of communities going on in every city that we have an action coach currently. And it's fantastic hearing the clients literally communicating every day with each other and lifting each other up and sharing best practices and strategies on how to pivot quickly. So take advantage of that. Tap into available programs like rolling over retirement funds if you have some available. There's some really huge benefits that Dave is going to talk about on that. Similarly, the programs that the Feds are releasing and the SBA programs that Mike can offer, get the needed funding that you need right now. Manage cash flow. It's vitally important. Even though Mike probably won't discuss it so much on the unemployment side of the fence, the Feds have, if everybody could mute your phones and your computers, I'm hearing some background noise, that would be fantastic, thank you. But managing cash flow, you may have to lay off some employees if you haven't yet. And the employees are getting if they don't earn over $75,000 a year, this new bill is going to provide them $600 a week of additional money. So I was just working with a client this morning and running some numbers, and it makes sense for them to likely lay off some employees. The employees will make more money, and the client, the business will preserve that cash flow. So it may make sense. Get with your coaches, run the numbers, figure it out. Plan for the recovery that's going to come. It will come. So again, this too will pass. We don't know exactly when, but the Feds are doing the right things to get it there. And let's see. By the way, on that unemployment comp, it's $600 per week extra unemployment if the person earns less than $75,000 a year. If they earn between $75,000 and $100,000 a year, then they have to pay it back. Or that $1,200, I think is that way. The $1,200 of free money that they're giving out to people, all adults in the nation. On that particular one, I think they have to pay it back if it's between 75 and 100 grand, and over 100 grand, I don't think adults get access to it. So we'll see the details as they come out in the coming days. But I want to cover this one disaster loan first before I turn it over to Mike, just because the banks do not handle this one. And Mike is very busy right now working with his clients and working with all the new clients that are coming in, dealing with the stimulus package that's coming, and dealing with just normal SBA loans. So this one, you have to go directly through the federal government to get access to this. That's the website right there, disasterloan.sba.gov. And by the way, we're recording this, and you'll get a copy of the PowerPoint as well. On this, there's no cost to apply. You can access up to $2 million if you're approved with very favorable terms. However, you're dealing with the government, number one. They do not have the capacity to deal with the flood of people that are coming through, and it's the government, quite frankly. So as much as they're doing, that's the right stuff to do for us right now. They've got a lot of, some slow processes and things like that. The website itself has been very slow, especially during the day. So if you're going to do this, which I suggest you do, definitely go early morning or late at night. You can probably knock it out in 2 to 3 hours, something like that. If you try to do this during the day, it may kick you off the site. It may take 6 hours or more. Have your personal financial statements ready. Ideally 3 years of business taxes. If you don't have 3 years worth, have what you have. This cannot be used for expansion capital or new startups. This is used for businesses that have been existing businesses that are devastated because of COVID-19. So for expansion capital, that's where Mike and the SBA are going to come in. Same thing with startups. Similarly, you have to have a physical presence in your local state and county that you're applying from. But this is where, do not go through the banks on this. While Mike will gladly answer questions, things like that. Like I said, be respectful of his time because he's very busy dealing with the programs that the banks actually are the vehicle through the federal government for. So so get with your local action coach or just try to do this on your own that way. Okay, I'm going to flip it over to Mike now. Huntington Bank is a great strategic partner of ours, as is Phoenix Funding Source. I'm actually going to turn it over to Dave at Phoenix. I'm sorry about that. And I've been working with Dave for many, many years. He and his team are fantastic. They do great work, and he truly, truly cares. I literally tell people all the time that, I trust him with my own family, and I have sent family members to him. So they've got a really cool program for rolling over funds. So let me find this Dave's information here, and then I'm going to give it to him. Hold on one second. Okay, introducing Dave Wogan.
Okay, thank you, Craig, and thank you everybody for jumping on today. I just want to start with this one little line. Keep your eyes on the prize and stay focused. We'll get through this. And I appreciate Craig, I appreciate Mike for being involved, making all of ourselves available. We're here to help you in any way we can. I've been in the franchise industry for over 30 years. The last 9 years has been on the funding side of business, primarily helping startups. And this program that Craig asked me to talk about is a equity funding program, extremely popular in the startups, but also it is very common when people already have an existing business and they're looking to inject more money in working capital. So I'd like to start off with this question. Do you know that you can use retirement assets, whether it's an IRA, 401k, 403b, SEP IRAs, thrift savings plans, a qualified retirement plan to invest in your business? And when investing your business, you can go to the next slide, Greg. When you are investing retirement assets into a business, it is debt-free funding. It can be used for startup businesses, but also very common for existing businesses. It is not a loan. You're not borrowing against your retirement, and you are not required to pay it back. Basically, right now, you may have retirement assets, one of those that I shared with you, and maybe that is invested currently in the stock market, where the brokerage firm is investing that money by buying stock in publicly held companies. What you're doing is you're taking retirement dollars, your money, rather than investing it in the stock market, you're investing it by buying stock in your own company. And the retirement dollars are a silent partner in that company. Now, as we jump to the next slide, why use retirement assets? Well, nothing against what's going on right now, but we know, and even as I've seen a few of the notes popping up, there is a great deal of frustration in regards to the SBA, the FEMA emergency funds. And the number one reason why people will typically use retirement funds is because they want to preserve their own cash or simply may not have a lot of cash. The number two reason is they like the idea of debt-free funding. I guess the third reason I'm going to throw in right now for this particular is that I know that trying to work with the government, there's going to be an extreme frustration. You have to be totally patient. I know the websites are crashing. A lot of things are going on. With use of retirement funds, those are your retirement dollars. They're your money. So you are guaranteed to be able to use that money. When we talk about using the retirement assets, the one retirement, it has to be a 401k from a previous employer. A traditional IRA, you cannot use Roth money. So there's three phases to the program when using retirement assets. As we switch to the next slide, phase one is funding your business. And there's simply 4 steps that go into that. Step 2 is growing your business, the opportunity as a business owner to defer income up to $57,000 if you are under 50. If you are over 50, you get to use $63,500. And then the last phase is selling your business. It's the deferred exit strategy when you get out of business. So as we take a quick look at funding your business, there's simply 4 steps. Step 1 is we have to either set up or convert to a C corporation. If you're an LLC or an S corp, that means you are a manager or a member. And when using retirement assets, because there is stock ownership involved, the only entity that the IRS will allow for this program is to be used as a C corporation. So once the conversion is set up or set up a new C corp, step 2 is we're going to have you open up a new company 401k at a brokerage firm. I'm going to recommend Charles Schwab, and you could also use Fidelity. These are self-directed 401ks. Not all brokerage firms will do this program. Step 3 is, for example, with Schwab, we actually have a representative at Charles Schwab that you would work with directly to to roll over the funds into the new company 401k. Now, notice that you are rolling over a qualified retirement plan from wherever it originally is, the 401k, traditional IRA, not a Roth IRA, not an inherited IRA, okay, but a qualified retirement plan into the new company 401k. No different than the large companies, maybe a company that you originally worked for that had a company 401k. Once that money gets rolled over into the company 401k, now the 401k plan, think of it as a person who wants to invest in your company, and the 401k plan is now going to give the company money. In return, the company is going to give the 401k plan a stock certificate of ownership showing interest in the company. You will also, as the owner of the company, tell the representative at Schwab or Fidelity how much money you want transferred into the business checking account. Once that money is transferred into the business checking account, as you'll see in our next phase, in our next slide, okay, that money, once it hits the business checking account, is now company cash, no longer retirement dollars because of the stock purchase. And you are now able to use that money if you're starting a business to pay a franchise fee, for working capital in business, whether you're starting up or existing, to pay business expenses, operational expenses, payroll, and you can even take a personal salary because a salary is a business expense. So what I'd like to say is this is just a quick version, a quick explanation of what the program is all about. And if you look at the next slide, there is the contact information for us here at Phoenix Funding Source. Feel free to reach out to Max, Jeff, or myself, and we would be happy, very happy to talk to any of you at this time. And again, this is an alternative to debt funding. The other thing that we see a lot is when people want to get an SBA loan, and Mike will agree to know, understands this and agrees with this, is that if you don't have the personal cash for a cash injection, once the retirement dollars hits the business checking account, Mike at Huntington looks at that money as cash, liquid cash that will count toward your SBA loan. Okay.
Hey, Dave, this is Craig again. One quick thing I wanted to mention is when Dave does these through Phoenix, and Dave, correct me if I'm wrong on this, but you actually go to the IRS for every case you put together and get a letter of authorization from the IRS blessing the transaction that the person can put in their files, correct?
Yes, this program has been in existence since the 1977s. Many of you may not be aware of it, but it's a legal program. Yes, we do get this IRS approved, and because of the 401k plan, the way it is set up, it does allow you to legally use retirement assets to fund a business. And I just saw a quick question there is that does the business have to be profitable? No, it does not. Okay. So again, like I said, I would just take down our phone numbers, and at some point, if you would like to call Max, myself, or Jeff, please feel free to do that. We'll be happy to answer those questions. And then I'm sure there's a Q&A even afterwards that I'll be happy.
Yep, exactly. So fantastic. Thanks a bunch, Dave. We're gonna bring Mike in now and have him walk through the latest and greatest in terms of what's going on with the stimulus package and what is going on right now in terms of what's available at the SBA. So hold on one second. So Mike Golick, another great strategic partner of ours. Mike is fantastic to work with, and like I said, Huntington gets deals done for small businesses. So, Mike, I'll turn it over to you.
All right. Well, first of all, I hope everyone can hear me now. And don't you think that gentleman from Verizon wished that he had trademarked that saying, because he'd be a billionaire by now from everybody saying, "Can you hear me now?" So that being said, can people hear me?
Yes, we hear you fine.
Yes.
Yep. All right, great. Thank you. Thank you. So I know sometimes technology is supposed to be great. I know that I was able to dial in on Tuesday. And then for everyone that is joining us new, thank you very much. And for everyone that is back, welcome you back. So again, as Craig said, my name is Mike Golick. I am with Huntington National Bank. I am an SBA loan officer. I've been doing SBA lending for 10 years. And prior to that, I was a small business owner for 15 years. And so I do have a lot of experience in small business. And I'm a small business person and advocate through and through. So that being said, I know that we are in trying times right now. So Craig, if you would like to shoot on forward, we'll talk a little bit about SBA loans, and then we'll talk about kind of what the stimulus package that went through last week. And so again, for everybody that's been on prior, we talked about a couple of types of SBA loans that are available for you currently. Now, these are loans that are coming directly from a bank and not from the federal government, but coming directly from a bank. So our purpose is we're going to talk mainly about the 7A program and the Express program. And those programs are used exclusively based off of what your needs are and how much it is that you're looking to borrow. So for a 7A loan program or the Express, you can use that for startup financing, as Craig had talked about at the start. You can also do it to purchase another business, which may be pertinent to a lot of people on here. And then sometimes within the purchase of that business, we would need to finance goodwill. So intangible items, stuff that you can't touch, but sweat equity. Other uses are commercial real estate. You can also use it to purchase equipment. You can also use it to make leasehold improvements. You can use it for expansions. And then the last piece that might be pertinent for everybody here is debt refinancing. Now, a nice thing about using the SBA is once you get in the program, we have a lot long payback periods. So for a lot of these uses up here, you get 10 years in order to pay back your loan. Once you're in an SBA loan, the bank cannot take your loan away from you. So we can't ask you to refinance with another bank, and we can't change the interest rates on that. So in case of an economic downturn, we are not going to take away your access to capital to inhibit the flow of your business. Now, you can do a 25-year payback for real estate. And then the interest rate that is going to be used is typically going to be a rate tied to prime. Prime is currently at 3.25%, and that prime rate is set by the U.S. Federal Reserve. And then the maximum amount over that prime rate that the bank can charge you is 2.75. The bank can set that spread or that 2.75 lower than 2.75, but they can't set it higher. Then the Express loan is typically loans that are under $350,000. And those are typically done at a branch level, or you can come to me as well. And again, it's the same terms and the same uses as the SBA 7A, except for you can also do a line of credit through the Express Line program. And that currently, as of today, caps out at $350,000. So as I was talking, I kind of saw a couple of questions that are popping up. Yes, SBA loans for both the 7A and the Express program, banks are actively looking at participating in these loan programs today. These are facilities that have been around since the 50s. And banks, again, are doing these right now. And these are ones that we know work. We know where the program is at. We know what the lending parameters are at today for these types of loans. And again, we're doing, at least Huntington is doing them For all of these uses above, the business acquisitions, commercial real estate, equipment, leaseholds, expansions, and again, debt refinancing. Debt refinancing might be one of the most pertinent pieces to what we're talking about today. Because as we talked about in the last 2 webinars, a lot of us are really unsure about where we're currently at. We're unsure about how are we going to pay our bills if we can't get any deferment. We're afraid about how are we going to be able to pay our employees and keep ourselves in business. So these 2 programs that are current for you right now are going to help you through those times. Okay. And yes, an SBA loan is considered to be a federally guaranteed loan. Now, it's not guaranteed to you as a borrower. It is guaranteed to us as a lender. And what that does is that allows us to do loans that we might not otherwise do, which means that we can do loans for debt refinancing. If you were to go into your traditional bank, mine as well, if you were to walk in and say, I need to refinance my debt, the bank would typically say, we're not really interested in refinancing debt. So are there any questions based off of that? I saw that there was a lot of chat that was going. So if you'd like to go to the next page, Craig. Thank you. So then when you talk about who really qualifies for an SBA loan, again, this is a loan that is coming directly from the bank. And as we explained in prior webinars, wholly different from the disaster loans. Disaster loans coming directly from the SBA, these loans coming directly from a bank. Now, a majority of businesses will qualify for an SBA loan. You do have to be for a for-profit business. You also have to be a U.S. citizen or have permanent resident status. What is the process? So this is the big thing, is how long is it going to take me to get my money? And that's what everybody is wondering. So we really have a couple of different phases to the actual process. The first one is going over your eligibility. Are you eligible to receive funds? Does your business cash flow? Meaning cash flow is after you pay all of your bills, all of your expenses, do you have enough money plus a little bit of cushion to be able to afford the new debt moving forward? And I understand that as of March of 2020, a lot of businesses, your balance sheets and your income statements aren't going to look the greatest. And SBA lenders will take that into consideration. Typically, your cash flow, if you show historical cash flow over the past couple of years of even being stable or increasing and an upward trajectory, that is a very good piece for a lot of SBA lenders to look at. However, if over the past couple of years, you have shown a downward trajectory,
False audio.
I think we all did.
Yep, nothing here.
get you.
Hey, hold on a second, Mike. Hey, could everybody else please mute your phones and computers so that we can hear Mike? Thank you.
Craig, you can't mute. You're going through speaker.
All right. So a lot of times when you're asking about how long it's going to take me to get my money, it's going to vary based off of what it is that you're looking for. And it's also going to be based off of the bank that you go to. Typically at my bank, before, let's say March 1st, I was able to get you through and get an actual approval from underwriting in 3 to 5 business days. After that, we go into a closing process. The closing process will take a minimum of 5 working days through the closing process for us to collect all the closing documentation that we need to get it verified and in order to set a close date for you. So I think that temper expectations, we're looking at a time frame for an SBA loan that doesn't require a lot of outside documentation or a lot of outside influences. And again, depending on the speed of the borrowers, in order to get us the documentation we need, we're probably looking at a 2-week minimum. So 2 to 4 weeks, I would say, would be something that we should look for and look at doing. Is that going to happen every single time? It is solely going to consist of how quickly a borrower can get the bank back the information that we need. Banks that are vested and do heavily amounts of volume within this program, like Huntington, are built to get you in and out as quickly as possible so that we can get you your financing as quickly as possible. And so I think that some of these things that we've talked about the past couple of webinars, which is being ready, being prepared, and being proactive for what it is that you're going to need and what is your ask going to be on the bank. Next page. And then this is just some stuff that everybody knows about to what we are currently doing for customers in loan closing, for our customers that we close, and customers for the future. I'll just talk about the last thing that we're doing for the future, which is banks are, again, actively looking for people to do loans right now. At least my bank is. We are getting ready for this stimulus package. We are getting ready for what we can do right now. And then we don't know yet what's going to be happening with the stimulus package, how those funds are going to be dispersed, and how the banks are going to be waiting to do this. So what we are offering currently for people that are going to be in the future is going to be an interest-only period, right? You'll see that there's going to be a minimum of 6-month interest-only period for all new customers. We are also going to be offering, and what I do every time I do a loan is I always offer a companion revolving line of credit. You've heard me say this. When I look at a loan, I want to capitalize you correctly on day one to make sure that you can go through the peaks and valleys of a startup business or even your current business, right? To make sure that your cash flow is there for you and that you don't run out of cash and then have to look at alternative funding. And I know there are a lot of questions that have been flying right through the chats, and I'm trying hard to keep up here. So Craig, next slide, please. All right, so there is currently a $2 trillion stimulus package that has been passed, at least in the Senate, hopefully, and should be going into the House for passing in the House. Now, I have read various things over the past couple of days, or even the past 24 hours, about how much this stimulus package actually is. I've read $2 trillion. I've read $2.2 trillion. But basically, what I want to say is that this is still going through, and it is still, I don't want to say being negotiated, but it's still being worked on. So we don't know what the final parameters of this is going to be. As it goes to the Senate, then remember it still has to go to the House, and it still has to be signed on by the current administration president. Once that happens, that's when the banks will get a better idea about how much money we're actually getting and how these funds are going to be distributed to all the small businesses. So these are just a couple of things on this slide. Is we pretty much know that there's going to be close to $567 billion that are going to be earmarked to small businesses. Like Craig talked about earlier in the presentation, this is not necessarily for the large corporations. This is going to small business owners. Much different than what happened in the last decade, where the majority of those funds went to large businesses. This is earmarked for small businesses. And again, we're not sure exactly on the actual specifics of how the financing is going to be distributed. I've read a couple of different things. I've read some things from the Wall Street Journal. I've read some things from ABC News, and I've read some things from Bloomberg. Everybody's got their interpretation of what it is that they're looking on. And so just a couple of these snippets came from some newspaper articles that I had read. So of that 367 billion is supposed to go towards small businesses who pledge not to lay off their workers. Now, will that ultimately be what's in the final package? I'm not sure yet, and I can't say. The loans will be available during an emergency period ending in June. I'm not real sure what the time frame is right now, and I don't think the Congress even knows, because we don't know how quickly or how the funds are going to be dispersed. So how quickly are we going to go through these funding sources? How quickly are we going to go through this stimulus? And then the last thing is you kind of just see a piece right here that says that there's going to be $10 billion for small business emergency grants. So again, a lot of people have questions about, all right, we know that there's this huge pool of money. How is that going to be available for me? Is it going to be a grant? Is it going to be a loan? If it's a grant, what are the stipulations? How much money can I get? If it's a loan, how much money can I get? Is it going to be low interest, no interest? How long am I going to have to take to pay it back? And again, these things are still being worked on. And like Craig said, I want to emphasize that the government recognizes we are in a different time than we are 10 years ago, 15, 20 years ago, where the government had to bail out certain industries. This is a stimulus program and a stimulus package that is supposed to work for everyone. Okay, everybody is involved. At this point in time, nearly every business in the United States is a startup business, because we're all looking for revenues. We're all looking for ways with which to generate money. And we're sitting on funds and waiting for funds and saying, okay, what am I going to do to continue on? Next slide. So then again, what you can do right now, be very, very proactive. We had talked about contacting your current lender, regardless of who they are. Contact them, see if there's a plan. Talk to your current lender about deferrals. Talk to your current lender about changing your loans into a principal and interest payment. Talk to your lender about how they are going to handle you moving forward. Find out what type of loan that you actually have and find out the payback parameters on that. Majority of lenders, they basically have two things that we can work with you right now. And that is amending or fixing the terms of your current loan, and then getting you some additional permanent working capital or a line of credit. So talk with your lender, talk with your action coach about a plan, be proactive for what we know today. Because next week, we know the money is coming. However, we, again, don't know how that money is going to be distributed, what the parameters are behind that, how much you can get, what the payback period is for that. All right, so I guess we can open it up for questions, Craig.
Yep. Excellent. Thanks, Mike. And so I've got a bunch of questions already emailed and chatted, so we'll start going through those real quick, Mike. And
Sure.
And we'll stay as long as we need to, you guys. So feel free to continue to put more in the chat box. Treff asks, what criteria does it normally take to qualify for an SBA loan, and how does FFRCA change those standards?
All right, so when you're talking about qualification for an SBA loan, if you're a for-profit business, if you qualify as under the SBA terms and definitions for being a small business, and that typically is either revenues or employees under your NAICS code. Past that, if you have cash flow, you're pretty much qualified under an SBA loan. Now, moving forward, are you going to be a good candidate for a certain SBA lender? And that's going to be up to the underwriting and the credit standards of that particular bank that you go to. We mentioned before that what might work for one bank might not work for another bank based off of the likes and the needs of that particular SBA lender.
Okay. Lena asks, can anything be done to reset interest rates on an existing SBA loan?
Okay. So I think that when you looking at resetting the rates on your loan, you need to look at what you signed for under your loan documentation. I know that particularly at Huntington, we set our rates at a variable rate tied to prime. And we add that additional piece into it. So then if prime goes down, we change that interest rate the next business quarter to what the new interest rate, to what that new prime rate would be, plus that additional spread, and that would be the interest rate that you're working under. Some banks do set a fixed rate with their SBA loan, and in that regard, you might not be able to get it to be changed. You'll have to ask your SBA lender and say, what can you do to help me out on this? Once you are in an SBA loan, the SBA lender cannot approach you as a borrower to change any terms and conditions of your loan. You have to approach the lender in order to change that. There are some things the lender can do, and there are some things the lender cannot do based off of SBA parameters.
Great. Steve asks, are new businesses less than 5 months old evaluated differently?
So businesses that are less than 5 months old are typically going to be looked at as still being in the startup stage. So any businesses that are under 24 months or any businesses that do not have 2 years of verified tax returns are considered to be startups. So then what the lender will do is the lender will look at your business plan. The lender will look at what you've done so far. They'll look at how much debt that you've taken out to see if your business is stabilized. They'll see if you've been using your expenses correctly, or if you've been not using your expenses correctly, but if you've been using your capital correctly. If you do have revenues, or they'll look and see if you're just trying to keep the business going and need money to keep the business going to throw out debt, or if you truly can use it to expand and bring in additional revenue.
Great. Dave asks, is an existing SBA loan considered a federal loan or a federally guaranteed loan? I have an existing SBA loan.
Okay, so that would be considered to be a federally guaranteed loan. So if it's asking you, so if you default on that loan, on your SBA loan, you will not be allowed to apply for any additional SBA loans in the future if there was a loss incurred by the government.
Okay. Rise asks, literally, I just paid off an SBA loan in February. Am I disqualified now because of the 2-year interaction limit?
I'm not real sure what a 2-year interaction limit means.
Okay. So that probably,
I've been doing this 10 years. I haven't heard of that. Now that's not to say that that's not around, but I have never heard of that.
okay.
You can get an SBA loan currently up to $5 million, or aggregate SBA loan up to $5 million. So even if you are in a current SBA loan, you can get another SBA loan, which again aggregates at $5 million. If you paid one off and there has not been a loss to the government and you pay that off in good standing, then you're definitely able to continue on in the SBA loan with another lender or with your current lender.
Okay. Jimmy asks, should I proceed with a disaster loan app or should I wait for the modified 7A in the stimulus?
I think that's the question, Jimmy. I wish that I had a good answer for you. I think that the advice so far that we can say is what your needs are. Take a look at what your needs are. Take a look at the time frame. And it might not ever be a bad idea to do the dual track process, seeing if you can't get those disaster loan funds, and then also seeing if there aren't other financing options available for you.
That would be my recommendation. Go both tracks, Jimmy. And one track does not hurt the other. Getting a disaster loan does not hurt your ability to get a 7A. Correct, Mike?
That is correct.
Yep.
So I was going to ask for more money than what you need, get it, and then you can start working backwards from that point as to where your situation actually is.
Yep. Awesome. Leah asks, is the stimulus loans that are for keeping employees, are they also good for adding employees? Can I use that loan to hire more people versus just keeping my existing people?
Yeah, again, I think that we're going to get more information based off of the stimulus package as it actually does get approved, when it does get signed. I think then we're going to have much better information as to exactly what's in there. Not that I think that it's in negotiations right now, but I haven't found a credible source yet that tells me exactly what is in this legislation and exactly what's going on. So I would say that concerning the stimulus, We can throw around numbers right now to where we think that we're going to be at, but until we actually get it signed and sent out, I am not real sure what's going to happen with that right now.
Okay. Kirk asks, the proposed stimulus sounds like it's going to forgive the loans if the business keeps its employees. Is this true or not? Don't know yet until it's signed, right?
I would say don't know yet until it's signed. I would say that, again, there's been a lot of interpretations of what's going on. The one thing I think that we can say with certainty is that there's going to be a lot of money, and I believe that the money that's going to be available is going to be going towards working capital and money to get to small business owners so they can keep people employed, money to go to small business owners so that they can keep the doors open. Now, that's for that stimulus money. Right now, there's money that's currently available through the SBA lenders to do things right now, to refinance your debt, to pay off your accounts payable. Your accounts payable is going to be considered to be debt, okay? It can also, again, to be used to give you some permanent working capital. So those things right now that are available for you are going to be different than, I believe, what the stimulus package is going to be once it finally does come to us.
Awesome. Treff asks, how do we qualify hourly payroll costs for use under the SBA loan? Our hourly employees who are in-home caregivers do not have fixed work schedules as are directly related to client needs and requests. Can we pay these hourly employees with an SBA loan for the hours that were canceled due to this pandemic?
So I think, again, it depends on what type of financing you're looking for. If you're going to do a permanent working capital loan right now or a line of credit right now, the permanent working capital loan or the line of credit uses can be used towards what you had just described. So it can be used towards salaries. It can be used towards employees.
Excellent. Bill asks, my business is actually doing quite well given the industry that I'm in right now. Can I qualify for SBA loans for ongoing expansion capital?
Yes, sir. We are doing expansion capital as well. If you're looking to buy out a competitor, if you're looking to open up locations, or if you need expansion capital for hiring new employees, those are all great uses of current SBA loan financing.
Okay.
And good job. Congratulations.
Yeah. Tina asked, what does the Beacon score have to be to qualify?
All right. So the SBA is nice. Again, we talked about the SBA being a government guaranteed loan. And one of the things that the government says is that we do not have a floor on a personal credit score within the SBA. So that means it's going to be up to each individual SBA lender that you do go through. Now, I know with my particular bank, when we see a little bit lower credit score, what it is that we do is we take a look behind the reasons for that low score. Is there a medical issue? Is there a divorce in the past? Or have you been propping up your business using your personal credit cards and your personal credit in order to run your business, and that's the reason? Or are you just not real good with your credit right now? Is it a case to where you miss payments consistently and you're just not paying that much attention to it? So majority of SBA lenders will look at the history behind that low credit score. Some might have drop dead scores, but a lot of us are just taking a look at the history and seeing what's going on there, and then we'll make a decision from there.
Okay. Patty asks, if we take out a loan, what are the requirements to prove that it has been actually used properly?
Okay, so when we're talking about the sources and uses, so some things are pretty well defined. You're going to buy a piece of equipment, we need a purchase order. If you're going to buy a piece of commercial real estate, we need the offer to purchase. You're going to buy a business and its assets, we kind of know what we're going to be paying for on the assets. When we're talking about a permanent working capital loan or a line of credit, this is where it comes into where you say, okay, this is what I'm going to be using this for. And if we can somewhat justify what that's going to be used for, then I think that we'll be in a good position. So if you say my monthly expenses are $25,000 a month, I need 3 months worth of working capital to cover those monthly expenses. Now you're up to $75,000. A good lender will then take what it is that you're looking for and then add some additional money in there to cover something that you haven't found. And in past webinars, we have talked about the fact that in you being proactive, when you approach the bank, you need to know what it is that you're looking for. This isn't a case to where you are applying for a home loan and you say, how much do I qualify for? This is a case to where the lender is making a loan decision based off of what your needs are at that particular time.
Yep. Mark mentions, I'm a small business owner, 97 employees. That's a pretty decent sized business owner, by the way, Mark. I've recently let 7 go in the last 2 weeks. I'd like to bring 2 of them back. And as of right now, I plan to release 10 to 15 more in the next 3 weeks because of slow business due to the current virus situation, and possibly put more on part-time. Would I qualify for a loan, and would that loan be forgivable if I keep those employees, or and then secondarily, what if I do let them go? Is it forgivable if I bring them back because of the loan?
Okay. So I think you're asking 2 separate questions. Would you qualify for a loan? Again, the bank is going to look at what your needs are, and the bank is going to look at what you've done historically to be able now to afford that loan moving forward. Okay, so that's the first piece. So can't say for sure whether or not you qualify for a loan. Releasing workers doesn't necessarily disqualify you for a loan. Now, future-wise, again, this piece is going to be part of the stimulus package, which I believe is what you're asking. I cannot say for sure right now what the features of that stimulus package are. And I know that there's been some things written in the media, different sources saying that this particular stimulus loan is supposed to be used for employees, keeping them through a certain period of time. And if you keep them through that certain period of time, your loan is forgivable. I'm going to say right now, we do not know yet what the parameters are of the stimulus package. We know a loan amount, but we don't know how the terms and the conditions to that money. We don't know that yet. So we still need a couple more days yet in order to figure that out.
Yep, it's still pretty fluid, as everything coming through Congress tends to be on the front end. Denise asks, and I think I'll handle this one first, Denise, and then I'll ask Mike for his 2 cents if it's anything different. But Denise asked a question about laying off employees so they can get some unemployment benefits. She anticipates business resuming by early May. So assuming the time frame to get unemployment started will take about that much time anyway. So what are our thoughts on that? My understanding is with this stimulus package and trying to get things revived quickly, they are streamlining unemployment. Schumer called it unemployment on steroids. And part of that means employees can literally get approved the very first week they're unemployed. They don't even have to take a week off right now to get approved. That's my understanding of the process. And they will get $600 additional unemployment per week over and above what they would normally qualify for. And they get an additional, is it 13 weeks of unemployment than what they would typically qualify for as well. I think that's what's currently being batted around in the bill. Mike, do you have any other comments?
I'm going to stay away from the pieces that don't include the lending.
Gotcha.
They barely let me handle the SBA lending, much less anything else. So I'm going to leave that to the other professionals.
Okay. Heath asks, my employees want me to lay them off so they can make more money. We've now successfully created a bigger problem for the employer. Yes, in some cases that may very well be the case, Heath. So hopefully, get with your local action coach if you don't have one, so you can pivot on that front and get better employees on board, et cetera.
I've read that was one of the issues that was coming through earlier on in the week for the actual stimulus bill within the Senate version, which is how we are going to pay unemployment and who's going to go where. And I believe that was one of the pieces. Again, we're all hearing this from the media. We're hearing slants from both parties, so we're not real sure exactly where it's at. But I think, again, we have to wait for the American people to be able to see what's totally in this bill until it gets signed. Because unfortunately, I can't find a good source to see what's actually in there.
Yep. Dan asks, what if income was inflated this past year due to insurance payout from a different disaster that we went through? Will that inflated income, one-time income, adversely affect a lending decision?
Yeah, so I think that the underwriters will take that into consideration. They'll see what you've done the 2 prior years or the 1 prior year and say, okay, what has this one-time event done? And are we, again, upward trajectory outside of that one-time payment? Are we stabilized or going upwards? Or without that one-time payment, would we have been in a lot of trouble?
Yep. So bottom line for everybody on the call is neither the government nor the banks want to fund a dog of a business. So if the business was trending in the wrong direction during a booming economy, subtracting out one-time situations like that, they're probably not going to fund it. Correct, Mike?
I would tend to say yes. However, if it's worth your time, you never know, because when there's a lot of money that's available, some things that might be marginal for a lender today might be something that is going to go tomorrow. I just don't want to say that, yes, you're absolutely going to get it. It might be an uphill battle though, but if you stick with it, there might be a possibility.
Yep.
Okay. And I hate saying mights, and I hate saying probabilities, and I hate doing lawyer speak, but unfortunately, a lot of these are one-on-one cases. And what we know today is we're not looking at downward trajectory coming soon. Who knows?
Yeah, and the other side of that is if there's been a downward trajectory, but you have a good business plan on how you're solving that downward trajectory anyway, and that's something your action coach can help you with, getting the right strategies in place, making those pivots, et cetera, whether it was before or after the COVID crisis, that can help the banker see the story basically, and hopefully help get things approved. Correct, Mike?
Very much so. Very much.
Stacy asks, will the banks be dealing with the stimulus funds that are coming through right now? Will that go through the banks, or will that be direct from the government like the current disaster loans?
Great question that I asked this morning. And my personal thought process is a majority of it is going to be coming back down through the banks. The banks already have an institution in place. As much as we sometimes do make mistakes, there is a very, very solid banking institution going on in the United States. And the federal government is not equipped to handle $2 trillion in order to handle small business loans. So my process is, I believe the majority of it is going to be going through the banks and allowing the banks to disseminate that money on out to the small business owners, to Main Street, with probably a certain portion of it will, I would imagine, be held back again for this disaster. And how that's going to be administered, or if that even happens, I'm not sure.
Okay. Brian asks, and Brian, you may need to unmute yourself to help me understand the question better, but Brian asks, it's Brian Cooper Ohm, by the way. I heard some politicians talking about 36 hours. Is there any reality to this? So if Brian, if you're still on the call, if you could qualify what specifically you heard. My gut would be, just seeing that on the surface, that they hope to have it all signed, sealed, and delivered within 36 hours.
No, the actual comment that I heard was by Rubio, and it was how they expected some of these loans to be available to go out, and it sounded like to get processed in as little as 36 hours, and I wondered if there was any reality behind that.
That would be awesome. Mike, your thoughts as a banker?
I would be on board on that. I hope that Rubio and his staff are going to step on up and help to process those. I would say this, that the banks want to get you money as quickly as possible. The banks do not have, we have a vested interest and getting you that money, the sooner we can get you and the economy propped up from the federal government stimulus, the sooner that everybody is going to be in a much better position. So the banks are going to want to do these things as quickly as possible. However, distributing $2 trillion worth of money might not be something that can be done within 36 hours. Hopefully, maybe he's referring to different programs, because again, we still don't know yet how a lot of this is going to be done. Maybe there's something in there to where they're going to give a quick pop to everybody, the kind of the same way they're sending out the checks to personals, to individuals. Maybe there's something in there to where there's going to be a quick pop of 50,000 or 75 or 100,000, where you just send in a one-page application, say, I need my pop. The bank says, great, here you go, here's your financing. Maybe that's what he's referring to, but again, until it comes through, we're not real sure yet.
Okay, they did some of that with workforce stimulation back in 2009. Did they not, Mike? Yep.
Yeah, correct. So those of us that have been in business over 10 years now, if anyone remembers the Jobs Work Act, they put out something called the ARC loan program. And at that point, it was a $40,000 pop that literally took, it was a 2-page application, and banks were doing them left and right in order to get a quick $40,000 on into small business owners' hands. And remember, that was just for that incidence. And this one is almost double or triple the amount of stimulus money. So we're going to wait to see if that is going to be available for us.
Okay. Peter asks, I read somewhere that if I currently have a line of credit, I am not eligible for a government SBA loan. Is that true?
Not real sure about that one, Peter. I know with us, again, you are limited to $5 million per your social security number as of today. And so if you have a current line of credit, I don't see why that would preclude you from getting further funding, unless the business has been in downward trajectory and your current lender knows something that we don't. But I would say this, that on the face of it, you are still eligible for SBA financing.
Yep. So Val asks, what about businesses who've already laid off workers, because it looks like a lot of the stimulus funds are a pledge to not lay off workers. What happens in that situation?
In terms of getting the further money, I believe, again, that, again, none of this has been figured out yet. We're just right now looking at the money, and then after the money comes, I believe when we're going to have a much better idea about what the parameters are. But I would say this, in putting together the stimulus package, both parties recognize that there have been layoffs right now, that there have been massive layoffs, that there have been people that had to leave their jobs, that there are small business owners that had to make the tough decision in order to somewhat stay in business, lay off their workers. So I believe, again, I don't have any inside information, but I believe that a lot of the stimulus that's going to be coming up and a lot of how we're going to work this is taking into consideration what has already occurred without any repercussions, without any looking back at that business and saying, you really should have, because we need to keep you going right now up until the point where we can get you that money.
Yeah, my gut is similar. I would anticipate that if you've already laid them off and you're going to be able to bring them right back because of this loan, that's exactly what they're trying to do. They're trying to get full employment again as quickly as possible. I don't think they're going to punish somebody for making a decision 2 weeks ago that took the feds 2 weeks to clear up. So they got us into this mess with all the shutdowns. They owe us a little bit of stimulus to help get us out of it. So Kirk asks if we will host another seminar once the package is actually passed and we know all the details, and absolutely, we will keep you guys informed. We're already planning for one, hopefully for first thing next week, if everything's approved here in the next 24 hours or so. So we'll keep you guys informed. Let's see. Dave asked, I have an existing SBA loan since May of 2017. I've always been current. Can I apply for an additional loan during this crisis?
Yes.
Yep. Perfect. Can I go through a different bank?
Yes.
Yes. Awesome. Do SBA loans and disaster loans have different qualifications?
Yes.
Yep.
Yes. So again, remember these are administered by two separate entities. Disaster loan administered by the actual SBA through their disaster loan program, the FEMA program basically. And then the SBA funds for the 7A and the express loans, those are administered and given to you by a lender, by a bank lender, a depository lender, or a non-depository bank lender with an SBA license.
Excellent. Kelly asks, can I pay off an express loan that I already have with an SBA disaster loan?
I saw that, and at this point, I am not sure if you're going to be able to do that.
Okay.
It's basically one part of the government paying off the other. Typically, that's not something that they like to do, but I will actually follow up with you and get some further information on that.
Okay.
But again, take a look, talk with your qualified professional to see if that's going to be the best case for you, considering what's going to be coming up and what might be, I don't want to say forgiven, but some new parameters that might be coming up based off of the stimulus.
Yep. Heath asks, I have 2 employees pressuring me to lay them off for the additional $600 per week. I'm also seeing that if I lay them off, I may suffer in another area. How would you handle this? I'll answer this one, Heath, from a business coaching perspective. If you need them to operate your business and that's going to cause your business to suffer in a different area, certainly don't lay them off. However, make the decision, are they the right employees for my business? If they're saying, hey, just lay me off, are they the people you really want for your business? Get with a local coach to help you out through those decisions based on the specifics would be my suggestion. Kay asks, do they redline any areas for SBA loans?
In terms of geographic areas or in terms of uses of proceeds, Kay?
Kay, if you could unmute yourself, that would be great if you're still here.
So actual SBA loans coming from a bank. So a bank loan, SBA or express program, we do not redline areas. As a matter of fact, that's against the law to do that.
Okay.
So we have to loan in all areas.
Okay.
That banks have charters and are allowed to work in. There's rules and regulations for that. You can't just say, well, we're going to loan in this zip code and not in that zip code.
Yep.
You can get a lot of trouble for that.
That stopped back in the early 90s, didn't it? Yeah.
Yes. Now, a disaster loan, the one that's actually offered directly from the SBA, that is why those counties had to show that they needed that assistance, was to get on that county list for that particular state.
Okay. Amy asks, this is for Dave Wogan. Just to clarify, are you borrowing against the value of the portfolio of the SEP or 401k? And does margin play into this in any way?
Good question, Amy. You are not borrowing against the retirement. The retirement is buying stock in the company, and on an annual basis, the IRS requires that there be a stock valuation done to determine the value of your privately held stock. So if your business is going to grow, then the value of that stock is going to grow, which ultimately is going to help you with the growth of your retirement. And at the end, if your business sells and you build your business and you sell it for a profit, then when you receive a check from the buyer, that money from retirement, whatever that ownership interest is, will go back into your retirement.
Excellent. Thanks, Dave. Laurel asks, I have 2 businesses. One's an LLC that's a year old, and the other is a sole proprietor for the last 20 years. Which should I apply for a SBA disaster loan with? Can I do both?
Depends on who needs the money the most. And yes, you could apply for both. And then the way that the lender will look at this is you do have affiliation. So if you have controlling interest in 2 companies that are looking at borrowing money, the lender is going to make the decision as to how much money, if they can honor the request for both businesses based off of the performance. So if you have one business that's performing very well and you have another business that isn't performing, the lender might take a look and say, okay, are these funds really for the well-performing company, or are these funds for the company that's not performing as well that we wouldn't be able to fund if not for this stronger business? So again, the non-answer answer, which is it's all going to come down to the numbers.
Okay, super. Several people asked that they've read that if they have a current line of credit that they're not allowed to apply for a disaster loan. Is that true? And it's not, is it?
To my knowledge, I have not heard that, and I have not read that anywhere.
I think it gets into I think it gets into without knowing more on the question, but I think the disaster loans are for people that don't have the other means of funding themselves through the process. That you're literally going to go out of business if you don't get funds right away. I believe that's the case. Is that your understanding as well, Mike? So if you have other means of getting funding, they're likely going to deny the disaster loan. Does that make sense or not?
Yes, it does. It does. That point I'm not real sure about. I think that the administration put out the $50 billion in order to try to get an immediate solution for people that had needed that financing right away. And then I think as people are going through this application process, they either are learning if they are eligible or they're learning if they're not. And I think that there are some people that have been through the chat that have actually applied and have gotten denied. Keep with it. There are reasons for being denied outside of just you're not eligible.
Okay. Diana asks, are the requirements relaxed for a person with great credit to acquire a business that's not yet cash flow positive, but it's more than 2 years old?
Great question. So even though credits in the SBA, we don't have a minimum, it does help you if you do have very, very good credit. But ultimately, when you're making a business acquisition that is kind of stable or maybe a little bit below that line, we're really going to look at what your experience is, what you bring to the table, and then how strong is your personal financial statement.
Yep. Rise asks, what about independent contractors? I have an independent contractor that I pay hourly. Can I include him in my employee count?
For an actual bank SBA loan or disaster loan? If it's for a disaster loan, I am not sure how that works and what they consider to be employees or not employees. I don't know if W-9 employees or independent contractors are considered to be full-time employees or not. So that's something that you're going to have to get off of that application.
Yeah, and Rise, I also saw that they are including like gig workers, if you will, Uber drivers, et cetera, as being eligible for unemployment, which wouldn't have typically been the case prior to this. So that may be part of that as well. Let's see.
I think we're catching up here, Craig.
Yep, I think we are. We're getting close to the bottom of them, which is good. Jet asks, I've built a massage center for over 20 years. We grossed under $1 million last year, but we cannot operate under COVID-19. Can I qualify for a loan when we don't know how long this will last?
Yes, you can qualify. Well, when you say qualify for a loan, that's kind of a loaded question. I would say that your industry is eligible. I would say that get together, again, with a trusted advisor to figure out what your needs are going to be, what your short-term needs are going to be, and what your long-term needs are going to be. And then you can approach the lender from right there. You seem to be a good candidate, at least just from the industry-wise. You are not an excluded piece in order to get a bank loan SBA.
Yep, and 20 years of history is a very, very good thing.
It's very good too.
Yep. Kevin asks that Mnuchin indicated in his speech that he would utilize FDIC-insured banks for same-day funding. Have you heard that, and is that your understanding?
I'm going to leave this one alone again.
Okay.
Again, I know that the banks are going to be on the forefront of what's going on here. once this stimulus does come into play, in addition to what we are doing right now, currently on an everyday basis until we get this stimulus for SBA lending, the banks are going to be there in order to disperse the majority of these funds. And same day funding, again, we're not real sure yet exactly what that means. I think that sometimes before it finally comes out, everybody has an idea of how they want it to work. But the way it actually does end up working without input, without actually coming up with a plan, we're still going to need a couple more days before we know.
Yep. Rick asks, I've heard about a business interruption loan, and that if you use the funds for payroll, that portion of the loan will be forgiven. Is that an SBA loan or some other vehicle that he heard about?
As of today's date, in an SBA loan, we are currently not forgiving any SBA loans. So that could be a separate type of financing piece that some alternative lenders are offering. I am not sure. Quick thing about alternative lenders. So everybody has heard of Lending Tree, Payday, things like that. They offer very quick turnarounds for decent amounts of money. I would say if you do go down that route, really, really make sure you know what the cost of financing is, what the cost of funding is. Really make sure that before you get into that and the seduction of the quick money within 24, 36 hours, really know what that amount of money is going to cost you and really know what the terms are. A lot of those run between 30 to 40%, and they will take that out of your account daily. So please, when you're looking for financing, make sure that you're going with something that is going to be cost effective for you.
Yeah, and I want to echo what Mike just said. To the degree you possibly can, stay away from those fast turnaround payday lenders. They will eat you alive, and you'll pay so much money in interest. It's very, very difficult to get out from under that. Instead, be talking to your landlord and saying, hey, I'm going to defer some payments for a few months. Can I tack it on to the end of my lease? Do whatever else it takes to stay away from those guys. I don't think they're healthy for businesses. Know what you're getting into for sure. Kay asks, is a personal or business financial statement needed for the additional forms on the website? I'm assuming she's asking about disaster loans. And yeah, they're going to want a personal financial statement, Kay, and they're going to want the last 3 years of business taxes as information on there. So, well, that's great. Thanks, everybody.
Craig, this is Raymond.
Oh, go ahead, Raymond.
I think David and Kate wants to jump in. I'm not sure if they know how to, but they are signaling they want to say something.
It's Dave. I just wondered if the telephone company is offering any relief. I've got big bills with those dudes, and I sure would like some relief on them.
Yeah, I would definitely call them. I would call any of your vendors like that and say, hey, here's a situation. What can I do? And certainly most are probably going to try and work with you to the degree that they can. And, you know, what I've seen happen with some of our clients is we work with the vendor like that and say, hey, look, we'll just pay extra over, you know, starting in June or July for the balance of the year to make up for the difference. Will that be okay? And a lot of them are being very, very gracious on this kind of stuff. So that would be my suggestion. And then was there somebody else, Kay or Kate?
Yeah, Craig, she had asked, what about personal bankruptcy?
Oh, okay. Yeah.
So personal bankruptcy through the federal one, I'm not sure how the federal one is answering or addressing that question. The SBA, the way that I look at a bankruptcy is I look at how soon was it? Because when we do a background check, we go back over the 7 years that the credit reports do, right? So we're looking, I've had 1980 for some people. So we do extensive background checks. If you have a bankruptcy, ever disclose that, even if it's not on your credit report. If you've ever had one, disclose that. Typically, our banks are looking within a short time frame, 24 to 36 months, to make sure you don't have one that early. If it is, you're typically are going to be seen as still coming out of that and still learning what the process is. However, we do look at what precipitated that bankruptcy. Was it medical? Was it divorce? So again, factors. But it's not necessarily going to preclude you, but it might make it a little bit more difficult to get a bank SBA loan with the bankruptcy on your record.
Yep. Great answer, Mike. Rick answered the question about the interruption loan earlier. He was referring to something he heard about on an NFIB, National Federation of Independent Businesses webinar. So it was a government loan of some kind, but weren't allowed to ask questions on that webinar. So
I suspect anything associated with the stimulus program, we're going to need a little bit more information as to what exactly is in there and who's going to get what and how that's going to be disseminated. Yep,
that'd be my guess as well. And you might want to pop them a note, Rick, on whoever organized that webinar and just send them a note and ask specifics about that. I believe they might be referring to the disaster loans that are available, because that's kind of what they're geared for. If all of a sudden the business just shuts down, that's to get you through that. Jeff Waldera mentions, I know many, if not all, internet and cell phone companies are pledged to a program called Keep America Connected with 60-day deferrals. So definitely talk to your cell phone and your internet service providers. Spectrum is offering a deal right now if anybody has any students in the house, whether they're high school and under or whether they're college students, that 2 months of free internet service. So with 0 contracts. So literally you could sign up, add it, kill your other one if you wanted, if you were on somebody else, and cancel your Spectrum with no penalties for canceling in 2 months. So there's a lot of different things that the companies are doing. So thank you, everybody. We will send out a follow-up email with links to the presentation and this video. So again, get with Mike, get with Dave, get with myself, with our team, and take some fast action now. You really can't wait. Our action coaches are really, really, really good at what they do. Mike is really great at what he does. Dave is really, really great at what he does. And so definitely take action, get things in place, get the plan built for the recovery because it's coming. And that is what I've got for you. Here's a couple of resources here on the screen as well. If you fill out the gobigactioncoach.com contact, we'll get you connected with somebody in your local area. Here's the other websites that you should go to. But definitely keep your mindset right. Get with your key advisors. Get your, the bankers, your attorney, your CPA. Get them involved in this process as well. And God bless, guys. Have faith and keep praying. We've got recovery in the midst, and be grateful for what we have. Be grateful for your families. Be grateful for the opportunity to be in America, where we do have all this access to stuff, and be grateful that you're an entrepreneur. You can choose your future. A lot of people can't. So God bless. Take care, and we'll connect in any way we can. Thanks a bunch.